Hello and welcome to the weekly commodity market update. I'm Brownfield's Will Robinson, joined as always by the University of Missouri's Ben Brown. Good morning, Ben.
Good morning, Will.
So how's it going? You're still at home, still out for break.
Yeah. I went in yesterday and there wasn't anybody in my building. So I'm working from home today.
Well, believe it or not, I'm actually at the Brownfield headquarters today. Made a stop. I'm back in Missouri. Finally, school's out in Ohio, so I'm happy
Nice.
about that. So yeah.
Nice. You don't have to worry about putting up that banner behind you then.
No, yeah, I came in, it was already up. I was like, that's perfect.
Heck of a deal. Heck of a deal.
Exactly. Although I will say it's gonna get really freaking cold. It's gonna what's the high, for what Thursday, Friday, Saturday? It's gonna
Yeah.
be like 10 degrees or
One.
something.
Yeah. I think there's one night where the high is one and yeah,
Ugh.
it's like -10 is the anticipated expectation. So
Yeah. Well,
see.
kind of teasing some of the commodity talk today. Is that gonna have any impact on anything?
No, I don't think so.
Yeah.
No, we should be good.
All right. Well, looking at some comparisons on the market, how are we doing this week as compared to last week?
Yeah. So old crop corn for March was down 5 cents to 6.49. New crop December corn was down 3 cents to 5.94. January soybeans up 8 cents to 14.68. November soybeans up a penny to 13.84. Soybean oil was up 2.5 cents per pound to 64 cents, almost 65 cents. That is probably the one commodity, Will, that could probably see some help if it does get cooler. Just that whole energy complex and including that soybean oil, vegetable oils. Soybean meal up $2.30 per short ton to $452. Old crop wheat down 7 cents to 7.47. New crop wheat for July down 7 cents to 7.60. And then that West Texas Intermediate crude oil up $2.33 per barrel for January to settle just under $76 a barrel.
All right, so some adjustments there, seeing, but really today's topic, our focus on the conversation is going to be going back to trade talks, exports, and really it's been a drag of a year. So before we look at the picture holistically, what have we been seeing recently? What's been the tone set these last couple of weeks?
Yeah, so it was another solid week for increasing U.S. ag export sales for our most recent week of data. Corn, soybeans, and wheat all exceeded pre-reported trader expectations. Soybean volumes were the second highest of the marketing year. So those are those new crop or those current year sales that we got last week. And then if we look this week for the export shipment, so these are the product that gets on the boat and heads across the water. Weekly U.S. ag export inspections were mixed on the week. Corn and wheat were up week over week with relatively solid values, while soybeans were down week over week and the lowest values since early October.
So Ben, I'm sorry, I kind of jumped the gun there. I'm trying to skip ahead as quickly to Christmas as I can. So do you have any other weekly highlights? What else were the main market drivers that we saw?
Yeah, no worries. So it was an interesting week. U.S. energy stocks increased across the board with ethanol production pulling back from a very strong output the week before. If we look at the National Oilseed Processors Association report for the month of November, they reported that their members crushed 179.2 million bushels last month. That's a bearish number to the soybean complex as it fell below all trader expectations. The soybean oil stocks value is also bearish. Came in a little bit higher than what many people anticipated. While we're still seeing strong use for the product, just not as strong and is what people anticipated. Stocks are building. The Federal Reserve increased their short-term federal funds rate 50 basis points last week, as expected, but its chairman signaled that longer-lasting interest rate increases were to come, and that dampened the moods on Wall Street. The U.S. dollar continues to drift lower as many people kind of continue to see maybe a little bit softening in inflation numbers, balancing of economic conditions. Open interest futures and options positions were up slightly for Chicago wheats and up 4% for soybeans while being down 2% for corn. Managed money traders were increasing their net short positions of wheat while increasing their long positions of corn and soybeans.
All right. So a lot of factors to be watching there, and a lot of things when it comes to trade that have impacts. You talk about the slightly down or the weakening U.S. dollar that could bode well longer term. Looking at U.S. trade exports, as that makes things cheaper on the global market from a buyer standpoint. But at where we sit right now, you talked about some recent, slight positivity, but really, it's still, kind of putting a party hat on a donkey, right? You're not really getting much, much positivity necessarily from this year as a whole.
Yeah, and really we're talking about that feed grains complex, specifically corn, got started off slow, and then just has not had the added sales or the export inspections really to increase the outlook there. USDA lowered their export target for the year in December. I anticipate that we'll have more of those to come. Even with stronger week over week corn sales this last week, total commitments of U.S. corn continue to lag and are 273 million bushels below our seasonal pace needed to hit even USDA's revised target. So that's down 26% from where we need to be at this point. Even if exports were to catch back up to average, that's it. Just catch back up to average and remain consistent through the remaining part of the year. We'd finish 13% down from where we are right now. So that that signals to me that we've got a big hole in corn that's going to be hard to fill. And especially given some of the COVID challenges within China, which, if we are going to see increased shipments, it's going to have to come out of the Chinese market, plus Japan, plus Mexico, plus Korea. But China is really going to be the added source. And with the challenges they're facing, I think it's going to be hard to catch up. Argentina is having a down year, they're having a rough time with extended periods of dryness that's impacting their corn crop. But certainly, I think corn exports are a little bit of a headwind.
And I know we touched on this last week, but I mean, whenever you're making an outlook or, kind of talking about things, and the best case scenario seems to reach an average or reach what would be average, that doesn't really make you feel all warm and fuzzy, especially when you think about we have what a month and a half left of this, exporting window before you start seeing that South American crop come more online. Or what are your thoughts there on what type of window is left?
Sure. So, I mean, the majority of the exportable supplies out of Brazil won't come until, later next spring, just because that's that second crop corn that gets planted after the first crop soybeans. They use a good chunk of their first crop corn for livestock feed. And so, the exportable supplies will have to come later. But certainly just not seeing, the purchases and the commitments to really increase our shipments, which is, interesting in one sense. Like I've kind of painted a little bit bearish of a picture here for corn markets, or at least related to exports. However, there are some things that I'm watching that could keep pushing prices up or even maintaining the prices we have. I'll give you a couple of examples. The feed grain complex as a whole is just tight. Wheat for feed is not competitive in feed bunks in Western Kansas. It's not competitive in major places around the world. Grain sorghum, same thing. But then even think about dried distillers grain. So that's that byproduct of ethanol. Ethanol production's down this year compared to last year. We saw some weaker dried distillers grains production numbers come out earlier this summer, and that just again tightened that whole available feedstock component for livestock feed. So I think corn's really the name of the game in town. But looking at our prices compared to prices around the globe, I do think we're going to trend lower here in the spring to kind of match some of the world's prices to be competitive with Brazil when their corn comes online, stuff like that.
Well, and earlier you talked about some of the challenges that China and maybe some of the other buyers are having. What challenges are really the main roadblocks to them maybe purchasing more U.S. products?
Well, early on, it was the strong U.S. dollar, and really high prices with the strong U.S. dollar creating an environment that just really caused some demand destruction or tapered some demand. As I look now, I think it's a mixture of things. China's reversed their policy related to COVID. Initially, it was a zero tolerance policy to where if anybody had COVID, they were required to stay at home. It caused some economic challenges to as cases would spread, they would shut down whole regions. They've kind of reversed that. And I think what they're trying to do now is it looks like they're trying to get herd immunity, and it's going to take a little bit for that to happen. But the headlines, today were all about, the millions of cases of COVID that are popping up in China. That's going to create some short-term challenges, certainly some health challenges, and I don't take that lightly, but it's going to create some short-term economic challenges. And my concern is that it's going to push some of our demand for U.S. products, namely soybeans, out of our window. And you and I have talked about that soybean export window a couple of times in the past, about how it got started off slow, it might end early, and the challenge of catching back up on the soybean export complex.
Looking elsewhere and maybe still staying on the soybean side of things, we got a NOPA report last week. Did that really have any sort of market driving function there? What's the consensus on that?
Yeah, well, it was a rather bearish report for the soybean market in total. I think if there was one bullish highlight, it was the yields out of a soybean crush. So how much you get per soybean, or how much oil meal you get per bushel of soybeans, especially on the oil side, was rather bullish. Those yields were very low, signaling that that we're maybe moving into some poorer quality soybeans, or we crushed some poorer quality soybeans in November that just didn't have the oil content. If we continue to see those oil yields continue to remain low, that's going to continue to tighten that oil market and provide a little bit of bullish factors in that that soybean oil complex. But across the board, oil stocks were down below what we anticipated. The soybean crush value was lower than what we anticipated. And as a result, a pretty bearish tint. The soybean market has largely had the bearish story so far, in terms of all of our major commodities, the feed grains being very tight. The thing that's been keeping the soybean market up is that relative price spread between corn. And now that we're starting to talk about some bearish factors in the corn market, I really do worry that the soybean market's going to struggle to maintain, even though the globe is also tight on oil seeds. We're in a tight situation across the board, but the bearish demand factors on soybeans have been there, and it's been corn that's been holding it up.
And then, just for listeners out there who might not know, NOPA is the National Oilseed Processors Association. So that's a report that was released by them, kind of gives you a snapshot of where things stand, both kind of supply and demand wise on that front. So,
and their members represent about 95% of total U.S. crushers. So not everybody's a member, but we get a pretty good
picture of it. Yeah. So looking forward to the rest of this week. I know it's a holiday week. Christmas is on the way, so that could make some interesting days for trade. Maybe a lot of sideways trade. I don't know. So what should farmers and ranchers really be paying attention to this week?
Yeah, so we got our normal reports, the energy report that comes out on Wednesday, the FAS export sales report on Thursday. Then Friday is really a host of reports for our friends on the livestock side. We've got the cattle on feed. We've also got the fourth quarter hogs and pigs report that comes out Friday afternoon, right in time for the holiday break and the Mizzou football game on Friday, Will.
Yeah, gonna have all the 10 Mizzou fans down in Tampa. So real fun, a lot of fun.
It'll be a good time. I think Mizzou will.
I'm hoping for a good game against Wake Forest, but I don't know. Like, if it were in Memphis, then maybe I would have gone. You would have seen a lot more Mizzou fans down there.
I'm not gonna touch that. For our listeners not from Missouri or Kansas, there might have been a little drama around the Liberty Bowl.
Yeah. So, all right, Ben. Well, it's always a pleasure having you on. Good insights on the export market right in front of some holiday trading. So thank you for that. Listeners, viewers, if you'd like to learn more about us or about our sister program, the Weekly Livestock Market Update, you can do so at brownfieldagnews.com. Ben, again, thank you so much. I'm Will Robinson for Brownfield.